The Trump administration set to reimpose the first batch of sanctions against Iran today, according to Secretary of State Mike Pompeo. They're expected to hit Iran's purchase of precious metals, gold, and the U.S. dollar. On top of that, we're now less than 90 days away from the November deadline set by the White House for countries to stop importing oil from Iran. What will this mean for oil and gas prices here at home? Joining me now, Tom Kloza, Global Head of Energy Analysis for the Oil Price Information Service. Tom, always great to see you. Has that yet played out, these coming sanctions on Iranian oil? Has that yet played out in the oil market?
No. I think the next 90 to 100 days are about as unpredictable as any 90 or 100 days we're going to have. I mean, on the one hand, you can have really, really tough implementation of sanctions, and you could see Iranian production drop from, let's say, 2.2 on the export side to 1.5 million or less. And on the other hand, you might have political awareness raising the prospect of sales of crude from the Strategic Petroleum Reserve. So you can make a case for 90, you can make a case for 50. It's going to be that kind of a period.
What will you be watching for, Tom, as an indication of where that might go? Is there any news event that you're looking for? Again, it would be a release of oil from the Strategic Petroleum Reserve.
Right. Well, we'll be watching. I mean, if there's a release from the Strategic Petroleum Reserve, ostensibly it would be to put pressure on Iran, but it also would probably be to relieve pressure for the midterm elections. If midterm elections take place and gas prices are $3 in a lot of the districts, which went heavily for Republicans, you could have SPR sales. It might look blatantly political, but what doesn't these days? So those are the two elements that really make it very, very unpredictable. Without that, we would need an event to take gasoline prices much, much higher in the next 100 days. An event like a tropical storm, hurricane, or as we were sort of hinted to, something in Venezuela that sends them into utter chaos.
Hey, Tom, Mitch Rochelle, if you strip out all the politics, geopolitics that are driving oil prices up, and just look at it sort of over the long term, is it right for me to assume that it's costing more and more money to produce oil? And if you look at our labor shortages that we have in the United States, it's hard to find that labor. So is that a bit of a headwind on prices going forward?
No, it's really not. If we had the pipeline capacity from West Texas to the Gulf Coast and to the coast, we could be producing probably 1 million or 2 million barrels a day more. The problem is the ability to take away the crude. The cost of crude and actually finding crude, notwithstanding the fact that you've got truck drivers that are making well over $100,000, that cost is coming down. There are lots of fields where you can break even at $35, and there's really a lot of fields where you can break even at $55 to $65. So if prices remain high and you get rid of that bottleneck of moving crude from West Texas to Corpus or to Houston, you could really see crude oil prices move higher. It's not a matter of the underlying cost necessarily going higher.
One thing I always point out, too, is that these steel tariffs have been slapped on, virtually every company that doesn't use U.S. steel. It hurts because some of these companies that want to build pipelines out of the Permian Basin, those plans have been disrupted because of these steel tariffs. Mike Baker has a question for you, Tom.
Yeah, Tom, I'm going to throw geopolitics back into the mix. How important is China, in your view, when assessing the potential impact of the sanctions on Iran?
Well, I think China, the chalk for China, to use a horse racing team, is that China is going to continue to import more oil from Iran. And that means they're going to import less oil from the United States. So that's going to be collateral damage, so to speak. But I can't imagine under any circumstances that we would have some sort of a détente with China where they're not going to bring in Iranian oil. To a certain extent, they're going to be a beneficiary of that because the price will have to be discounted. So, oil is what we call fungible. It can be moved around different places. But we'll see how hard we really impose the sanctions. And if oil production gets cut by 1 million barrels a day and the economy, the global economy, keeps chugging, we could have much, much higher prices in 2019. That's the worry year. It's an off-election year, but that's the year I worry about.
Real quick before you go, Tom, last week President Trump proposed that plan to roll back the Obama-era fuel efficiency standards on automobiles. What's the impact going to be on oil and gasoline prices, do you think?
Well, first of all, the impact is full employment for lawyers, because the lawyers are going to make a fortune on this, particularly in California and 13 other states. I think the impact is that it slows the efficiency improvements in the fleet, and I'm not a big fan of it. I mean, you know, you see the ads where somebody's driving a big SUV and picking up a calf or delivering a calf, and in the Northeast, you know that it's on Long Island, and what would you pick up? A pound of veal or something like that. So. I think we'd all benefit if we live a little bit less large and don't drive Pope mobiles and stuff.
It's going to save potentially $500 billion for consumers because, again, ultimately the costs are passed. The cost of these fuel efficiency standards, in big picture, is I think we can agree on this. Being from the east rather than the left coast, is that California, the Trump administration is saying to California, you're not driving national policy on automobile fuel efficiency. No more.
No, California, though, has been kind of the laboratory for what's going to happen in the rest of the country. So, you know, the one thing you have to say about California is their air quality has improved immeasurably since the Clean Air Act. So we'll see a little bit of it. And, you know, if you've ever been coming from Connecticut or upstate New York and see the ozone sometimes in those real hot days, there's a good reason for trying to get a little bit of the emissions down in the Northeast. It used to be much worse, but it's getting a little better.
Thank you, Tom. Tom Kloza, as always.